Welcome to the Monocle Banking Podcast, your weekly foray into the world of banking, finance and insurance. As always, curated by Monocle Solutions. I'm your host, Michael Avery. Well, from the mobile money revolution to the rise of digital wallets, Africa has a knack for skipping the old playbook and writing its own. Today, blockchain is emerging as the next great leapfrog, reshaping cross-border payments, unlocking new forms of financial inclusion, and building digital trust where traditional systems have failed. And when we talk about trust in the African context, I certainly hold out great hope for blockchain providing more trust when it comes to property transactions and maybe, who knows, one day even rooting out the scourge of corruption. Well, to kick us off this week, we're going to be looking at the Africa Blockchain Report 2024, which is a new report that shows that even as venture funding slows globally, blockchain on the continent is bucking that trend. It's capturing 7.4% of all VC capital and 12.7% of deals in Africa. So it's a story of utility over speculation, of stablecoins replacing paper trails, and of a young generation coding its way past the old economic bottlenecks. Joining me to unpack this future are Rob Downs, Head of Digital Assets at Absa CIB, and Brenton Naicker, Principal and Head of Growth for Africa at CVVC, which is the force behind the African Blockchain Report. We're going to be exploring where the capital is flowing, why Africa is fast becoming the stablecoin frontier, and how the next wave of blockchain innovation could power everything from trade to climate tech. Chaps, it's great to have you on the show, and I think maybe, Brenton, you can kick us off. This is the fourth iteration of this report. Tell me a little bit more about how it's conducted and compiled, because as we know, data on this sort of thing across Africa can be notoriously tricky to collect.
Absolutely, Michael. So firstly, thank you so much for having myself and Rob. Really excited to chat today. And I think you hit the nail on the head, right? So one of the things we realized when we moved into the African ecosystem, obviously Swiss roots, global presence, is there was this lack of benchmarkable data within the ecosystem that allows us to really track the progress of the ecosystem over time. And that was one of the preliminary reasons that we decided to launch this report now in its fourth edition. So, it seems to be quite popular, particularly amongst global audiences. And we adopt traditional kind of rigorous research report methodology. So all of the data comes from traditional funding databases, both paid and publicly available, as well as credible public media. So all of the data and the methodology, is broken down in detail in the report. But what it allows us to do is year to year to track things like regulatory developments, funding, sectors of relevance, and then that geographical dispersion of funding as well. So we can see the development of the ecosystem over time.
And that's really the power of having something like this. Over time, you can see the evolution, the trends, and it's interesting to see the trends as they've evolved. But before we get ahead of ourselves, and thanks for that introduction, Brenton, Rob, maybe you can just define the blockchain, because I think it still trips people up. Actually, it's quite simple, really. Every time something happens, think of a payment or land is sold or a vote is cast, it's recorded as a block, and those are linked together in order, forming a chain. And once that's added, it really can't be changed or erased. And it gives you that immutable trust, isn't it? How would you define the blockchain?
Michael, you've just stolen my entire description. I guess another way that people often look at it, and often people sometimes conflate distributed ledger technology with blockchain, but it is an open ledger that multiple parties can participate in, they can write data to, and it can never be changed. And I think that's the real power of blockchain is multiple parties can use the same data source. It's largely open for permissioned blockchains, and people can never change it. So what's recorded historically will always be there.
Yeah, it's that immutability, that public record book that lives on the internet, that every page is stamped and sealed and no one can tamper with that. I think that really provides great power, and great power to disintermediate as well. Coming back to the report, Africa's share of global blockchain deals rose to 2.3%, but funding fell 36% year on year. Brenton, is this a sign of maturing markets with smaller early stage deals, or does it point to maybe investor caution and risk aversion? How are we to interpret those numbers?
Absolutely. So that's a very good question, Michael. I think, in terms of aggregate funding numbers, unfortunately, we are a function of kind of macroeconomic circumstances. And we can see these funding trends persist both across Africa in a more general sense, but also globally in kind of this, decrease in overall venture funding. But to the trends you pointed to, I think what's particularly interesting is the share of overall funding that is going towards the blockchain sector, both from a dollar funding perspective, but a number of deals perspective, is I think what is really telling of the maturity of the sector. So we still have a few mega deals, which are, by the law of averages, driving kind of those average numbers up. So we see quite a high average deal size. But in terms of the share of deals getting done, this is definitely being influenced by the fact that you're starting to see a lot more grassroots adoption and grassroots use cases coming up, which means the number of deals is quite prevalent. That, over 1 in every 10 deals done on the African continent based on the latest report data has actually been a blockchain-based deal. And I think people are waking up to the potential of the technology across different sectors.
And Rob, to that point, median blockchain deal size in Africa are double the all sector median. It's $2.8 million versus $1.4 million, yet the average deal sizes have dropped sharply. Does that indicate a flight to quality for you, with investors concentrating on a few high conviction startups while maybe avoiding some of the bigger ticket bets?
Yeah, absolutely. I think flight to quality is a really important point. People, investors, being more discerning, taking their time to understand where the real opportunity lies and trying to find the kind of white spaces around blockchain where they can start extracting value from their investments. So I think seeing more deep research and more deep analysis before that investment check gets written. And that's, I think, the higher value, lower volume.
And drilling into where we see a lot of the activity, Brenton, where are you seeing the big activity around use cases for blockchain? Because I think it's quite easy to imagine how this could be used to revolutionize a deeds registry, or even in the public sector to democratize voting in a way. But where are you seeing the use cases being deployed across the African continent at the moment?
So that's, again, great question. I think we're starting to see a lot of really interesting areas emerge, and you touched on some of them in the introduction, as well as some of the portfolio investments we've made around things like property verification, etc. But overwhelmingly, the short and medium term opportunity lies within the financial services space. And we can see this through the funding data. So in excess of 70% of all funding in the 2024 financial year in the blockchain space went to a combination of what we call centralized financial services and decentralized financial services, known a little bit more colloquially as DeFi in the crypto space. So by and large, the short to medium opportunity lies within that financial services space across things, predominantly areas like cross-border payments and remittances.
When it comes to cross-border payments and remittances, Rob, when the report was launched, I asked you how the bank is thinking about that, because obviously that's where banks have traditionally made really healthy margins. So how are you thinking about watching that potential remittance fee collapse? Are you quietly preparing to co-opt the rails before fintech eats your lunch? Are you partnering? What's your approach?
A little bit of both. I mean, maybe if we look at where the history has come from in terms of two big trends with cross-border payments. So in the corporate institutional space, we're seeing tokenized deposits being used to move money globally between organizations. And in the more, consumer space, you're seeing stablecoin growth. I mean, if you look at the size of the stablecoin market, 6 or 7 years ago was less than $1 billion. It's now north of $260 billion. So that growth over the last 6 or 7 years has been significant. We see that both, as a threat and an opportunity. You're absolutely right. There are a number of organizations that didn't exist 10 years ago that are really moving crypto, moving digital assets, moving stable coins in and out of Africa, intra-Africa. That is obviously a threat to our business. But we also see the opportunity where blockchain technology is helping money move faster, and digital tokens represent the underlying value of money and currency is moving faster and is moving cheaper. And we see that that's a field that we need to be exploring more and more actively participating in over time, and as the regulatory landscape becomes clearer.
And in the report, Brenton, that stablecoin point is raised as core infrastructure. The report calls stablecoins core infrastructure for Africa's cross-border payments. So given that, and the fact that the report predicts that within a decade more Africans will use stablecoins for daily transactions than traditional bank accounts, Is the African banking system ready for this leapfrogging moment?
Look, I think definitely not where we are today, but looking kind of where we're going through from the future. And, Rob can definitely share a lot more information on this than me, but I know banks are looking at tokenized deposits as a more efficient way of managing funds, particularly across kind of these interoperable silos or creating interoperability between these silos that they currently have. So I think it's inevitable that we're moving towards that direction.
Yeah.
The question will be more around, will it be consumer facing or will it just be, to the way the report terms it, core infrastructure that sits in the back and is kind of hidden to the end user, where we're just using our traditional banking apps, where we're able to send immediate, near free payments between different banking environments. But in the background, it's really this blockchain-based infrastructure that's powering those transfers.
I think, Rob, when we come back to this question, it's a really powerful thing to be bringing down the cost of remitting money in Africa. And I think if you look at the World Bank, the IFC reports, the cost of remittance has just been far too high. And for those who are migrant labor, working cross-border, sending money back home, it eats up a big chunk of the value. So for the end user, this is really exciting. For the bank, I guess this forces you to kind of reframe that relationship now with your end user to say, well, where am I going to be adding value to ensure that this customer remains loyal to me and sticky with me? How are you thinking about this inside the bank?
I mean, absolutely. I think the financial market infrastructure and the technology infrastructure in our bank, and I guess most of the other traditional banks, this helps us give us a new opportunity to rethink that and reimagine how that infrastructure could work and can work and potentially should work, which is cheaper to run, cheaper to maintain, and cheaper to scale and grow, not just in one market, but in multiple markets. So that's an area that we're really interested in exploring further, because obviously if it's cheaper to run, it's cheaper for the consumer and cheaper for the client.
Yeah.
I think building on one of the things that Brenton mentioned earlier, so I think retail consumers have really been a big part of the growth so far of stablecoins and crypto. What we're seeing now, as the regulations become clearer, as financial products are built around not just crypto, but other digital assets, we're seeing more businesses get involved, more businesses and corporate clients wanting to talk to us and have conversations about how the digital asset solutions can help them, whether it's alternative investments, whether it's looking at moving money between businesses, whether it's being paid by suppliers. We've got clients talking to us about the fact that their supplier base are paying them in whether it's USDT or USDC, and how can we support that? So we're seeing that growth starting to come a lot more through the business community, whereas it started, I think, through the retail community.
And just a follow-up for you, Brenton. I mean, we've seen Africa leapfrog before, and I think mobile money in the story of M-Pesa in Kenya is probably the most well-known. We did see the telcos ending up owning a massive chunk of the value chain there. In blockchain, do you see infrastructure providers like maybe the protocol builders, the stablecoin issuers capturing most of the value? Or will it be the application layer startups reaping the rewards? If you're investing, where are you placing your bets?
Initially, I think it's very clear at the moment and with the current structure that it's really core protocol layer and that infrastructure layer that is capturing the majority of the value. And there's a thesis within the blockchain space called the FAT protocol thesis, which is really about flipping this value accrual on its head. When the internet came out, that core TCP/IP infrastructure layer, etc., really captured close to zero value, where it was the application layer that ended up capturing all of the value that was created by the internet. This technology aims to flip that power dynamic slightly, where it's protocol layer and the core infrastructure layer that will end up capturing a lot of that value. But I think counter to that is we're starting to see them not capture as much value as was initially kind of hypothesized. So the application layer is starting to capture a lot of that value now that a lot of that core infrastructure is built and it's becoming very suitable for purpose. So I think it's going to be a much more equitable distribution than the internet, for example. But going forward, I think now is really the era of the application layer, where now that core infrastructure is in place, strong liquidity, stablecoin issuers, etc., people are now able to build on that core infrastructure to create really compelling business cases.
So given that, I mean, if foundational blockchain infrastructure is largely being built by the global players, Ether, Polygon, Cardano, we shouldn't really be too concerned that Africa is not developing this kind of foundational infrastructure if we're seeing that flipped on its head and it's really going to move to the application layer startups where a lot of the value is added.
No, absolutely. Absolutely. So I think the beautiful thing about this technology is that specifically at the protocol and the infrastructure layer is that it's open. So everybody is free to build on it. Everybody is free to iterate on it. Everybody is free to, as we say in the business, fork it and create their own versions. I think where the real need exists on the African continent is particularly at the application layer. And that's why it's so important that we have open access to this infrastructure so we can build purpose-built, localized applications that really solve the problems that we have on the continent.
And Rob, when it comes to the infrastructure, we know that Africa is still highly unequal when it comes to digital infrastructure. Do you see a scenario where traditional banks and maybe in-country regulators are partnering with blockchain startups to build shared infrastructure? Or do you think the private sector moves too fast for public frameworks to keep up?
Yeah, I think the private sector will nearly always move too fast, I think, for sometimes the traditional banks and the traditional ecosystems. And that's not necessarily a bad thing. But what I will say is, certainly in some of the markets we operate in, we've seen regulators spin up environments where we can test and learn, sandbox environments. In South Africa, we've been working with the Reserve Bank through Project Cocoa when that was established. So I think the regulators and probably infrastructure providers and likely fintechs and others have been trying to engage and work together. But I think it's impossible for traditional banks to out-innovate the market. I think there's just too much. Look at the report is highlighting how much investment is going into blockchain solutions across Africa. That's far more than banks are investing in blockchain solutions today. So I think it's good that there is that investment and that innovation still needs to come and must be supported. And our challenge, I think, is how do we start participating and how do we start bringing in products and services which we are comfortable that we've done the risk evaluation on, that we've tested the infrastructure and the technology, and then how do we then start offering those to our clients so that they know that it's a product and service that we've vetted and that we're happy to take to market.
And I mean, if you're Absa and you're not thinking about launching blockchain-based payment rails maybe with governments, isn't the risk that you become disintermediated by the private stablecoin players like USDT and USDC?
I think those solutions that USDT, USDC have accelerated significantly in the last 3 or 4 years especially. And what we need to understand is how do we either work with those providers or how do we offer products and services that we think are as good and as useful in terms of a utility for consumers and clients alike.
Brenton, I want to come back to what we see with regards to Africa's macro story, which is obviously compelling. I mean, 9 of the 20 fastest growing economies, yet still under 1% of global VC capital. Yet we still see VC capital that does flowing into this area. How do we attract more patient capital that understands Africa's long-term blockchain opportunity rather than short-term speculative bets?
I think as the specific blockchain industry, we're doing well relatively. So as you correctly stated, 1% of overall funding. But within the blockchain space specifically, Africa accounts for 2% of that overall funding mechanism, right? So again, not where we need to be, but moving in the right direction from a representation perspective. But I think for the African continent specifically, and this expands outside of just the blockchain space and the venture space, we are massively underfunded. And the only thing that is going to rectify that is to produce successful outcomes as a continent from these venture investments. Nothing induces capital flows better than returns do. So until we're able to produce successful outcomes, successful liquid outcomes for businesses that either scale or purchase, the likes of Paystack being acquired by Stripe, or companies that end up eventually IPOing, we're not going to see that residual capital flow from those developed markets start to open. So I think the biggest source is going to be global market investors who have seen the proof in the pudding and start to double down on their deployments to Africa. The second is, how do we unlock more sources of global capital? So one of the biggest catalysts for venture and innovation funding in the American economy, for example, has been endowments, pension funds, etc. And I think a question for us locally is, how do we unlock those sources of capital to fund innovation in African economies?
And regulatory clarity is highlighted as a key driver of VC investment in the report, with 7 African countries now offering full regulatory frameworks. How close are we to building a pan-African digital asset policy that could rival what's emerging in Europe with MiCA?
So I think 100%, and that's exactly why we believe that we're at an inflection point, because the leading markets in the African continent have either put out clear licensing frameworks, the likes of South Africa, where we've issued in excess of 250 or around approximately 250 digital asset licenses, or what we call CASP licenses. Nigeria is the same. The Nigerian SEC has issued a number of licenses in principle already. And then you see other leading economies like Kenya and Ghana, where the report states they're, a gray area, but the governments are actively have working groups that are working on clear regulatory policies and frameworks. And until you have regulatory clarity, Rob touched on this earlier, you can't tap into the likes of an Absa as a distribution partner or product partner in terms of what you're building. And that's what really unlocks scale. I think one thing we do need to take note of, similar to MiCA, is having more harmonization between these regulatory efforts. So at the moment, they're unfortunately operating in a bit of a silo where it's very difficult for startups, for example, who comply with South African legislation to be able to then easily move into other competing regions because the regulation isn't harmonized across those regions. It's often very different. So I think that is, while we're moving in the right direction from an African regulatory clarity perspective, I think there's definitely more room for coordination between those key regions.
And Rob, I've got to ask here, we know banks are amongst the most highly regulated entities on the planet. Yeah. Where would you say we are on our regulatory maturity spectrum across the various African markets that Absa operates?
Yeah, so I think there's definitely markets where we know the regulations are much clearer. So Mauritius have had regulations for 5 years, 6 years even. So there's some clarity there. South Africa, Brenton's touched a little bit on the CASP licenses. Crypto has been deemed a financial product. The travel rule was brought in at the end of April this year to help monitor transactions to ensure that the receiver and payer are known in terms of who's getting those transactions and that crypto transfer. So those markets are developing well. If I look at some of our other big markets, Ghana are moving quite fast, as are Kenya, Botswana also. So I'd say all the markets actually that we operate in are moving towards regulation, and that's incredibly positive. We would really like to make sure that each of those markets harmonize as much as possible, but obviously that's difficult. And that's something that across the kind of African continent and globally is going to happen over time, I think. I don't think that's going to happen anytime in the near future.
And we know the big buzzword at the moment is artificial intelligence, but we see this converge now with blockchain, and that's surely got to be highly transformative. From a banking perspective, Rob, how do you see AI-enhanced blockchain apps, maybe in risk modeling or credit scoring or AML even, changing the way that banks operate?
I think it gives us some really powerful tools, especially when we start talking about some of the kind of historical concerns around digital assets and crypto, around problems like money laundering, terrorist financing. If we can layer the transparency of what you get on blockchain, we spoke earlier about it being open and visible for people to see what's happening on chain. If we layer on top AI solutions to look at the data, look at the patterns, look at the modeling and the forecasting of behavior, that starts to bring us some really, I think, exciting tools to help manage the risks, and especially when you're talking about financial products and financial payments, because one of the big benefits of blockchain and moving money with crypto and stablecoins is it's essentially a real-time cross-border payment any time of the day or night, any day of the year. That's a great positive. But that's also a real challenge when it comes to looking at the risks for the sector, especially if you sit in a bank, looking at how we are responsible for trying to prevent money laundering, terrorist financing, because moving money that quickly can also be a challenge for us to monitor and control.
Yeah, it's the other side of that stablecoin, I guess. They're great advantages, but also equally quite a lot of risks. For your big corporate clients, I know operating in Africa from a currency perspective and repatriating funds from Nigeria, for example, if you're a unpack back to South Africa, has been a key challenge. How do you see blockchain helping corporates overcome one of these big challenges and hopefully really unlocking a lot of that $3.4 trillion potential of the African Continental Free Trade Agreement?
Yeah, I think it provides another tool for those big corporates to see how they can repatriate funds. I think it's been a challenge for a long time in Africa. I think we've been internally looking at this and brainstorming, how do we think that this could really help our clients move money? And essentially, what it does provide is another source of liquidity. So for clients who can move money into whether it's a dollar-backed stablecoin or other, it gives them another liquidity market to try and move those funds. But I think, especially as we look in South Africa, we still have a lot of challenges in terms of what do those cross-border rules look like. And we obviously are, engaging with our regulators here. So we make sure that as we participate, we're not doing anything that jeopardizes the ability of the Reserve Bank to manage monetary policy.
Just as we ended our time, Brenton, and I said in the introduction, for me, one of the big use cases has surely got to be in land and property rights when it comes to blockchain in Africa, because land registries are often plagued by fraud and disputes, and that obviously hinders investment and economic inclusion. Financial inclusion is a big driving force that we should all be aiming for across Africa. Surely a blockchain-based property ledger that's immutable and tamper-proof could become the gold standard for land ownership across Africa. But we're not seeing that yet. What's holding back large-scale government adoption of this idea?
So you're spot on, Michael. And I think in nowhere or very few regions is this more true than places like Nigeria, where they've got a very fragmented title deed registry system that kind of differs across the provinces, very little digitization. So we've invested in a company called House Africa that is solving this exact problem. Obviously, they don't want to take ownership of a government function. So they're creating a replica of that land registry, utilizing a blockchain-based database for, again, all the great benefits that we spoke about at the beginning of the podcast when we defined what a blockchain is. I think Rob touched on this earlier as well, right? Is that the public sector tends to move slightly slower than the pace of innovation or the private sector. So the company that we've invested in actually has signed agreements with 2 states in Nigeria where they're digitizing those records. They've just signed an MOU, I think it was a matter of weeks or maybe a month or 2 ago, with the Lagos state government. So we are seeing movements in that space, but I think it is, again, as a function of the pace at which the public sector moves, is going to take a few years before we really see that start to materialize at scale.
And again, Rob, banks often worry about the volatility and reputational risk of crypto, to your earlier point, yet the public sector needs trusted intermediaries to validate blockchain solutions. So can banks like Absa act as the trusted layer on public sector blockchain platforms, balancing decentralization with that institutional trust?
Absolutely. And, banks like ours are geared to manage risk. So can we be the dip between us and the public sector? I think there's a great opportunity there. And one other point, just building on what you were talking about with land registry, one of the other big unlocks, if we can get it right, is something like digital financial identity. So if we can create registrations for everyone to have a clear identity using blockchain technology, that also helps unlock massively, I think, financial inclusion. Because then it's much easier for consumers, individuals, to be able to access financial products, because all the banks will be able to trust a data source of who's who. And that will unlock, I think, a lot of inclusion.
Yeah, absolutely. And then, in my idealized utopian view of the world, one day I see this as being a silver bullet to end corruption. As we know, it's a scourge across the world, not least here in Africa. Brenton, if you look at it, could blockchain-based payment and audit systems where every transaction is traceable and immutable realistically disrupt the patronage networks that have historically resisted such reforms? Or is that a pipe dream? Is the political will just never going to allow that kind of transformation to happen in the public sector?
So, Michael, I think you hit the nail on the head at the end there, right? From a theoretical perspective, this technology is that exact silver bullet that you need for full accountability and traceability. Utilizing a blockchain-based payment network, using things like smart contracts that are automated based on different parameters, you would be able to have full transparency and auditability in how public funds were used, who they were dispersed to, what were the conditions that kind of resulted in that disbursement. Similar when it comes to a voting system, you can provide much more transparency into voting. You might not have seen what happened in the previous US elections happen. But the thing is, it all comes down to the political will to implement these types of systems. So theoretically, this technology is exactly the silver bullet we need. Pragmatically, will we see it adopted? That, I think, is a function of political will.
Well, we can certainly dream, can't we? As today's conversation shows, Africa's blockchain story isn't about just chasing hype. It's about solving real problems, faster and cheaper than legacy systems ever could, whether it's stablecoins, slashing the cost of remittances, or tokenized trade finance, boosting SMEs under the African Continental Free Trade Agreement. I think the continent is proving that digital trust can be a foundation for growth and not just a buzzword, with the right mix of smart regulation and patient capital obviously thrown in there. My thanks to Rob Downs of Absa CIB and Brenton Naicker of CVVC for guiding us through the insights of the fourth Africa Blockchain Report. The question now isn't if blockchain will reshape Africa's digital economy, but how fast and how boldly we embrace the change. If you enjoyed this episode of the Monocle Banking Podcast, don't forget to subscribe, share, and leave us a review. It helps us keep bringing you conversations that go beyond the headlines and into the real dynamics shaping financial markets. Until next time, I'm Michael Avery. Take care.